As of the current trading session on May 1, 2026, Lithium Americas Corp., ticker symbol LAC, is currently trading at $5.71. The stock has seen a slight intraday dip of about 0.35% from the previous close, though it has navigated a volatile range between $5.48 and $5.76 throughout the day. While a minor daily fluctuation might seem like noise, the real story here is the massive divergence between how the market is pricing this stock today and the sheer scale of the industrial engine being built in the Nevada desert. Most investors are staring at a $5 stock price and seeing a speculative mining play, but they are missing the fact that this company is currently sitting on nearly $1 billion in cash and is backed by a $2.23 billion loan from the Department of Energy. This is no longer just a project on paper. It has evolved into a strategic national asset that is arguably the most important piece of the North American battery supply chain. The prevailing narrative surrounding Lithium Americas is often one of caution, centered on the idea that lithium prices are too low to justify aggressive valuations, or that the timeline to production is too far off. You will hear people say that because first production at Thacker Pass is not slated until late 2027, the stock is dead weight in a portfolio for the next 18 months. That is the expectation. The reality is that 2026 is actually the most critical execution year in the company's history. We are currently in the middle of a milestone-dense stretch where the project moves from groundwork to mechanical reality. Right now, there are over 1,000 workers on site, and that number is scaling toward 1,800. If you are waiting for the first ton of lithium to be sold before you pay attention, you are essentially waiting for the risk to be gone. And in this market, once the risk is gone, so is the massive upside potential. When we look at recent stock movement, the action has been characterized by a tug-of-war between macroeconomic jitters and massive institutional accumulation. We've seen daily swings driven by geopolitical tension, yet underlying that volatility is a clear trend of big players stepping in. Van Eck Associates, General Motors, and major hedge funds like Millennium Management have established significant positions. General Motors alone has effectively tethered its electric vehicle future to this single site in Humboldt County. It is rare to see an individual brokerage account holding the same conviction as a global automaker, but that is exactly what is happening here. While the broader market might worry about short-term lithium carbonate spot prices, these institutions are looking at the 20-year offtake agreement that GM has secured. They aren't trading the daily chart, they are underwriting the industrialization of Nevada. The momentum in the lithium sector has also been shifting recently. After a period of oversupply in 2025 that crushed valuations, we are starting to see the first signs of a supply deficit for the second half of 2026. This isn't just theory anymore. We are seeing production cuts at major mines in Australia and export restrictions in Africa that are tightening the global market. As these supply constraints hit, the demand for domestically sourced, IRA-compliant lithium is skyrocketing. This makes Lithium Americas not just a mining company, but a primary beneficiary of a massive policy tailwind. For anyone using investing sites to track the sector, the contrast between the oversold technicals and the improving fundamentals is becoming impossible to ignore. Let's talk about what is actually happening on the ground at Thacker Pass right now, because this is where the expectation versus reality gap is widest. Most people think of a mine as a hole in the ground. Reality check: Lithium Americas is building a massive chemical processing facility. Throughout the first half of 2026, we have seen the delivery of major long lead equipment, including steam turbine generators and sulfuric acid plant stacks. They have already started delivering nearly 100 pipe rack modules to the site. These are prefabricated interlocking units that significantly de-risk the construction timeline. By the second quarter, we are expecting the commissioning of the high-voltage power line, followed by the completion of core concrete work in the third quarter. These are the invisible catalysts that rarely make the headlines, but are the exact markers institutional analysts use to justify a higher valuation. Comment below how many shares of Lithium Americas you currently hold, and whether you think the US government should be doing even more to subsidize domestic lithium mining to compete with international markets. To understand why this project is such a magnet for capital, you have to look at the sheer scale. Thacker Pass is the largest known measured and indicated lithium resource in the United States, period. The business model here is remarkably straightforward but incredibly difficult to replicate. The company plans to produce 40,000 tons of battery-grade lithium carbonate per year in its first phase alone. To put that in perspective, that is enough to support the production of up to 1 million electric vehicles annually. Because this lithium is sourced and processed in the US, it qualifies for the maximum consumer tax credits under current clean energy legislation. This creates a sticky demand profile that most international producers simply cannot match. If you are an automaker in North America, you don't just want this lithium, you need it to stay competitive. The partnership with General Motors is the ultimate stabilizer here. GM has offtake rights for 100% of the production from Phase 1. This means the revenue for the next 20 years is already spoken for before the first ounce is even mined. This kind of financial certainty is what allowed them to secure the Department of Energy loan at US Treasury rates with no spread. While other junior miners are struggling to find expensive private equity to keep the lights on, Lithium Americas is essentially being funded by the federal government and the largest automaker in the country. This creates a floor for the company that's often overlooked by retail traders who are focused on the 5-minute candle. Looking toward the back half of 2026 and into 2027, the catalysts are lining up in a sequence that could force a significant re-rating of the stock. By the fourth quarter of this year, the company plans to begin early commissioning of individual processing plants. This is the moment when construction risk starts to turn into operational reality. Historically, pre-production mining companies see their steepest valuation increases during this transition phase. As the engineering becomes reality and the workforce reaches its peak, the market has to stop pricing LAC as a maybe and start pricing it as a when. The risks, of course, remain tied to the complexity of the build and the potential for any unforeseen regulatory, but with nearly $1 billion invested already, the momentum is undeniably forward-leaning. If you are looking at this through the lens of a smart investor, the question isn't whether lithium demand will be there in 2030, it almost certainly will be. The question is who will own the supply. Between the massive DOE loan, the GM offtake, and the accelerating construction milestones, Lithium Americas has positioned itself at the very front of the line. The market expectations are currently suppressed by short-term commodity price fears, but the reality is a company that is systematically building a multi-billion-dollar infrastructure project that is nearly impossible to disrupt at this stage. It is a classic case of the market missing the forest for the trees. In summary, the gap between the current $5.71 price and the long-term strategic value of Thacker Pass is creating a high-tension setup for the rest of 2026. We've gone from the conceptual stage to the modular assembly stage, and as these physical milestones are met, the perceived risk of the project continues to drop. While the general belief is that this is a slow-moving mining play, the reality is a fast-paced industrial build-out backed by the highest levels of government and corporate interest. The contrast between the volatility on the screen and the progress in the desert is where the real opportunity lies. As we move closer to the commissioning of individual plants, the authority of the bull case only grows stronger. Keep a close eye on the concrete work in Q3 and the power line commissioning this quarter, as those will be the true indicators that the finish line is coming into view. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, bell subscribe for more updates.